Welcome to the X22 Report Spotlight. My name is Dave, and today we have a returning guest, Joseph Meyer. Joseph runs Straight Money Analysis. That's straightmoneyanalysis.com. He puts out an incredible quarterly newsletter that tells you everything that's going on in the economy, and I'm very happy to have him back on the X22 Report Spotlight. Welcome back, Joseph.
Good morning, Dave. Thank you and the X22 Report for having me this morning. Always an extreme pleasure to visit with you and your listening audience, Dave.
Joseph, I am very happy to have you back here. And let's start out with the economy and what's happening in China. And we see a lot of the talking heads today saying that China is the main problem of this slowdown. And if China goes, everything's going to go. Is China the main problem of what is going on in the economy today?
I don't believe so, Dave. I know China is very important to our economy and certainly economies of the world, but I think we've had for many, many years serious structural problems in our economy, and I think we have to look at our physical policies, and we've got to look at what we've been doing certainly to bring the decent paying jobs back to the shores of America and or create decent paying jobs. We built up a tremendous amount of debt in the system. There's no doubt about it. We've got massive debt by governments, corporations, and individuals, unsustainable massive bubbles in common stocks, bonds, real estate. I just think we've got to look to ourselves as the problems we've created with, quite honestly, Dave, no easy solutions on the horizon.
Now, the new job numbers have come in, and we're starting to realize that they're continually telling us that we are in this incredible recovery, that we're almost back to full employment. And they're trying to push out that these numbers are the real numbers. We're at, I don't know, something like 262,000 people added to the workforce. And we should be seeing incredible things because we are close to full employment. What do you think is really going on here? And do you believe these job numbers?
Well, number one, I don't believe the numbers. And secondly, even if I did, these are low-paying, no-benefit jobs that won't allow anyone to put food on the table or keep a roof over their head. So if anyone wants to believe for a minute, and I know some people want to, that these jobs are going to enable people to come back into the workforce and make a meaningful contribution, good luck. Until we start creating the decent-paying jobs where people can certainly pay their bills and pay down their debt, and start to save once again, we're not going to turn this economy around. That's the hard, tough reality of the situation, Dave, as I see it.
Now, the U.S. government, the central bankers, BLS, they continually put these numbers out there, and they continually tell us that these are the real numbers. I mean, how do they continually do this and get away with this without anyone really questioning it except for the alternative media?
Well, they get away with it because no one questions the statistics. No one takes a hard look at how they're calculating the numbers. As you know, they're using a much different formula than they did in prior economic cycles to certainly create the unemployment numbers. They're using a different system when they look at the job creation figures that they're giving us. And quite frankly, I don't think at this point we can believe any of the economic statistics we're being given, unemployment just being one of them, Dave.
Now, we know the government continually puts out all different statistical information like inflation, they put out GDP, they put out, of course, unemployment. Do you believe any of these statistical numbers that the government is putting out today? I mean, is this something that we need to rely on? Or can we rely on these?
Well, I never bought into the economic recovery from day one. I went on record calling it a fraud and an illusion, that it would never be sustainable, even if we did see a recovery, which I still will characterize as never happening. And I think the reality several years later is now finally setting into the mindset of working class America. There's not going to be a recovery anytime, I believe, in a foreseeable future. That's just the hard reality of the times we're in.
Now, the Baltic Dry Index is continually declining. It is below 400 points, and it's continually falling. Have you ever seen it this low before?
Well, it's unprecedented. I think it's speaking volumes to the economic slowdown we have permeating now the whole global economy, and I think it's telling us without a doubt we're headed for a very, very serious global recession if one hasn't already arrived.
Now, the Fed went ahead and they raised the interest rates. What do you think, and what do you think the reason is they went ahead and did this?
Well, I think raising the rates was totally unjustified. Looking at the real economic data that I certainly think is meaningful and important, they had no basis to raise rates. I think they raised rates for two reasons. Number one, to support the dollar, and number two, to get back some credibility, which they've lost. But I think when you take a look at where we are in the economic cycle, whether you agree with it or not, there's never been a prior point in history where they've raised rates as we're entering a supposed recession. So I think what happened here again is unprecedented. They've never raised interest rates in the month of December. You'd have to go all the way back to 1937 to find a year where they raised interest rates in the month of December coming into a new year. So I think, again, that speaks volumes as to what they're doing and how desperate they are to remain the illusion they're in control.
Now, the Fed continually says, and they're projecting that they're going to be raising the interest rates 6 more times this year. Do you see them raising the rates anytime soon?
Pipe dream. I think we will see zero interest rates once again before we ever see 1%, Dave. You know, what they're saying and what they will do are two different things. I think this economy is weakening and weakening now very rapidly. I also believe when we see how well the retailers did over the Christmas holiday in December, again, it's going to speak volumes of just how weak the consumer is and how weak the overall economy is now appearing.
How do you think retail did this holiday season?
I think it did extremely poor. I think when you look at the store closings that have been announced, even though at this point, it's uncertain when the store closings will take place, I believe over the last year, retail has been really dragged through the mud, and I think they're going to continue to see pressure and continue to see problems. The consumer, quite frankly, Dave, doesn't have the disposable income to support these retailers any longer.
Now, the job numbers make absolutely no sense. Prior to 2008, when unemployment was falling, retail was increasing. Now, as of 2011, we have unemployment at the highest point, and it's continually dropping from 2011 to 2015, and retail sales are continually declining. The job numbers that the government continually puts out, it doesn't make sense. So to me and to many other people, it looks like these numbers are completely manipulated.
That's exactly what it says, yet people still don't want to recognize that important fact. Go into the stores. Do you see the kind of traffic in the average store that you shop in the way you once did? At least not here in Florida, I can tell you that. Walmart recently had its worst quarter in 27 years. Again, that speaks volumes as to the money that the consumer has to even spend in Walmart. Job numbers don't make any sense when you take a look at the number of people on food stamps. You take a look at the number of people now in very, very tough economic straits. And you take a look at the money that people have been able to even allocate and set aside to spend through the holiday season. I think this honestly is going to go down on record when they finally report the numbers as one of the poorest holiday seasons ever. I think when you look at what is going on in these markets, when we usually have, as you know, seasonality come in late December, early January, you usually get the Santa Claus rally, as you know, Dave, which is the last 5 days of the trading year and the first 2 years of the new year. Here we started the new year, the worst performance in the new year in the 85 history of the Dow Jones Industrial Average. So I think this is unprecedented. I think we're in uncharted waters, as I've said many times in the shows we've done together. And I think we've got some big surprises ahead of us in 2016, and you better get prepared.
Do you believe there is some type of major correction coming in the year of 2016?
Well, we've never had we have up to this point a 10% correction over the last couple of years, and the correction is now underway that I believed was certainly ahead of us. A 20% correction, which I think is not unreasonable after how much this market has gone up, would take the averages down to the following areas. I'd like to share them quickly with your listening audience just to put things in perspective, Dave. Full 20% correction in the Dow would take us down to 14,681. Full 20% correction in the S&P 500, 1708, and a full 20% correction in Nasdaq, 4132. But if we were to go down to those levels, I still don't believe, until proven otherwise, that this bear market, which I believe at this point is now underway, would be complete. I think we've got to go a lot lower. I think we've got to flush out a lot of excess out of the market. And I think the surprise is going to be how quickly and how sharply this market continues to go down.
Do you see the same thing occurring right now that happened back in 2007, 2008? Do you see us moving into a period where things are going to get a lot worse?
Well, this is exactly, I think, the scenario playing out again that we saw in 2007 and 8. You know, when you talk about the slowdown, and I think it's starting to build momentum as we speak, and I think there's going to be layoffs and job cuts, and I just think the job market's going to worsen and continue to deteriorate. You know, if companies weren't hiring when things were purportedly good, do you think they're going to start hiring now that things are getting worse by the day and you've got the Fed threatening to raise interest rates even further? I think there's two levels on the horizon that I would look towards that I think this market can reach, I think, relatively quickly. I think when you talk about, you know, where the correction could finally go down to before we get any kind of meaningful bounce and support, I think there's the possibility you go to the 2007 highs, 14,100, and if that gives way, you would then work your way down to the 2000 highs in the Dow around 11,780, Dave. But I think if this is an unprecedented bear market, and I start to get the feeling that it is, I don't rule out for a minute we go back down and we test the March 2009 lows, 6470 in the Dow, 670 in the S&P 500. It wouldn't do it as quickly as I think, you know, one would want to believe with the economy deteriorating and unraveling. This bear market that I think is ahead of us could last anywhere from 3 to 3.5 years, Dave. That's the way I see it.
So why did the Fed raise rates if the economy is so weak?
Well, I think that's the big question. You know, they've backed themselves into a corner. If they were going to raise rates, I think they should have done it 12 to 18 months ago. I think, you know, they're looking at data that is backward. They're not looking at data that is forward. And I think, quite honestly, at this point, they're going to regret having raised rates. I think it's brought even more instability to the global markets. We certainly don't need it this time.
So if the economy starts to collapse on itself, do you think the Fed is going to implement QE4?
Absolutely. I think it's not a question of if, it's a question of when. I think the economy is addicted to this stimulus. I think all the central banks of the world are going to ease and ease again in unison. China is clearly slowing down. Their markets are in trouble. They've devaluated the yuan. I think the key here is, you know, how quickly these central banks realize that the global economy is simply in dire straits and in trouble.
So if the Fed goes ahead with QE4, isn't the rest of the world going to lose credibility in the Federal Reserve, the central banking system? How are they going to explain away that they need to implement QE4 again?
Well, I think if they don't do it, they're going to lose even more credibility by not recognizing the handwriting on the wall that these world economies now are changing and changing very rapidly. You know, this fall in oil prices has not helped, and I think it's going to continue to worsen the underlying fundamentals as we move forward. You know, people are talking about possibly $20 a barrel oil. I don't think we go down to $20 a barrel oil. I think at some point we find some support in and around these levels. You know, very coincidentally, and I'm sure you know this, Dave, we've got oil prices now down to the levels we saw in 2008 and 9. And the economy at that point was a lot worse than certainly it is currently. So I think that speaks volumes as to possibly where oil could be headed from here.
So why is oil falling the way it is?
Well, I think demand has just dried up dramatically. I think we've got a glut of oil. We've got the oil producers still pumping oil. It doesn't make any sense to me, but, They're pumping oil in the belief that oil will find some kind of a bottom at these levels and possibly start to turn around. I think at some point we're going to see OPEC cut production. I don't think they have any choice but to do that. But the other side of the equation, we've got Iran pumping oil and pumping almost to full capacity, and I think that's the wild card as we move forward. What does Iran and Russia do?
So where do you see the economy headed at this time?
Well, I think it continues to deteriorate the underlying fundamentals we still have left of the economy, and I think things continue to slide and get worse over the short term, that's for sure.
Let's talk about precious metals. We see that precious metals are very, very low at this point, and we don't see precious metals moving up. What is actually going on with gold and silver at this time? Why are they so low at this point?
Well, I think gold is being bought now by very strong hands, by people that realize within the scope of the big picture that the metals are going to continue to be the place as we move forward. We've had a full 50% correction from the bull market. We've had 255 to 1930. A full 50% correction comes in right around 1080. Even though we've traded periodically below those levels, we've always seemed to rally back above them. So I think we may see, as an outside possibility, 990 or 1,000, but I doubt it. I think when you look at what's going on, certainly with the precious metals, physical continues to dry up, and I think that's certainly going to be very important as we move forward. But I think we've got money coming out of stocks, money coming out of bonds, and finding a home in both gold and silver. That's what I think is going on, Dave.
Now, we see a lot of things happening around the world. I mean, out in the Middle East, it is a complete and utter mess. We see Ukraine, Eastern Europe. Again, the United States is over there pushing and provoking problems. We see in the Pacific the same thing happening. We also see in Africa pretty much the same thing. Why are we seeing all of this? And do you think the Middle East, the trouble there, is going to affect the economy in any way?
Well, I think when you talk about the Middle East, I've never seen it more unstable in my career, or more importantly, my lifetime. I question the survivability of a lot of these regimes moving forward with what has recently taken place over the last couple of years. I think what's different this time around, and I think you'll agree, Dave, is we've got Russia now involved in Syria. They've got a footprint now in the Middle East that they've never had before. Where this will lead and what it'll mean in the scope of the big things, I think that's something we don't know. But I think when we look at what can happen in the Middle East based on what's already happened, a black swan could come out of there at any time. It doesn't bode well for the global economies, and more importantly, what we're going to be seeing here in the U.S.
Do you see the entire system coming down in 2016? Do you see major problems occurring in this year? I mean, what is your prediction on all of this?
Well, I think we're long overdue for an economic contraction. I think we've built up so many excesses in all these markets, it's inevitable that we go through some difficult times. Typically, if you go back and you look at the recessions through the various economic cycles, on average, they last about 9 months. Two of the longest economic downturns, which I know you're aware of, and you probably, have lived through, having been in the industry as I have been, were 1973, 4, 81, 82. They lasted about 16 months on average. But I think when we look at how much this market has gone up, and I think when you look at, just how much money's been pumped into the system, we have the Fed having started around $800 billion in 2007. Their balance sheet now, I believe, is $4.5 trillion. We have to question their ability to fight an economic slowdown. They really don't have any room to lower interest rates the way they have in the past. So I think this economic downturn, when it starts gaining momentum and it starts down the hill, is going to be a nasty one. we could be looking at some very, very tough economic times as we move forward. I think the key is going to be what happens with the dollar, what happens with the bond market, and how quickly this stock market deteriorates and heads to lower valuations. I think in the scope of the bigger picture, Dave, simply what's going on is we have a global repricing of assets. And at this point, people don't want to acknowledge that simple, hard fact as to what is currently going on as we speak.
Now, what is the everyday man or woman going to experience when this whole contraction starts to occur? I mean, what are they going to experience when this happens?
Well, I think any liquidity that's left in the market is going to slowly dry up. I think any jobs that were certainly, going to come to the marketplace are going to disappear. I think we're going to see a lot of temporary unemployment. We're going to see a lot of part-time jobs created. And I think if you have a full-time job through these economic times that I think are ahead of us, you're going to be very fortunate. I just think we're overdue for some tough times, Dave, and people just have better prepare for them and certainly get their house in order.
Joseph, thank you very much for being on the X22 Report Spotlight. How can people read your information and get your quarterly newsletter?
Well, you can go to the straightmoneyanalysis.com website. We have a sample newsletter. It's a full issue of the newsletter on the website that people can download and read. I wrote a very extensive analysis in the December 2015 issue, and I'm starting to outline the topics I'll be covering in the next issue of the newsletter, which will be the March 2016 issue. But we write about the things that truly matter. We tell you why they matter, and we tell you what you can and should be doing about it. It's not a publication for everybody, but we write for the people that want to take the time to read and understand the things that I truly believe matter and where I think these markets are headed, and more importantly, Dave, when I believe they'll get there.
Joseph, once again, thank you very much for being on the X22 Report Spotlight.
Thank you and the X22 Report. Always a pleasure to visit with your listening audience. Thanks so much, Dave.